Hello, everyone. Welcome to yet another weekly analysis. So, for this week, we'll firstly be reviewing what we planned for last week, and then we'll review what we have planned for next week. So, let's straight on first and foremost, we'll have to do a top-down analysis on the pairs that we planned to trade last week. So, for last week, we looked at CAD JPY, I reckon. CAD JPY and I think Euro USD and GPS or something like that, or USD CAD. So for now, on CAD JPY, we can see that, for the monthly time frame, nothing has changed. But the reason why we have to always, go back to the monthly time frame is not just to, sound like a broken record, but it is so we have a structure, a flow that okay, every time we come on here for an analysis, we go to the monthly time frame. Every time we come on here for analysis, we go to the monthly time frame. Repetition. We need to continue to repeat the monthly time frame because it is very very important. The monthly time frame is a very very important time frame in our top analysis process. So on the monthly time frame, we are still heavily bullish. We can see huge candles forming up already. Now, the monthly time frame is not really useful in this case because the monthly candle has not ended, so we cannot use it to read whatever we need it for. But in the past month, last month, you could see a bullish engulfing in this one and this one, giving some sort of a morning star, candlestick confirmation, and not just any money star, but at an area of interest. It's very important. You know, look, it's very important to note that a chart pattern or a confirmation at any point in the market is not as important as a chart pattern at an area of interest. That's what I'm saying to you. So on the weekly time frame, we can see that we had a chart pattern or a reversal pattern, a morning star candlestick formation. You can get all of these things from the Candlestick Bible. You can get it online. It's free. It's free to download PDF, get it, read it, study it. So we can see that we have some sort of a of a head and shoulders and a double bottom, but it's clearly a double bottom, right? And then we started to give higher highs, higher lows. Now we're putting higher highs, right? Now on KJPO, I have a trade open right here, but it's the market and they're not volatile, so it was moving slow throughout the week. But we're optimistic. We're expecting it to get into our take profit one, and then we take majority and then let it ride all the way to the top. Now, I've been saying before that we trade from zone to zone. We have to first clear this zone before we then bother about the next zone, right? Because it just might get all the way here and then plummet to the downside, right? So right now we have to focus on this zone right here from here all the way to here. So now on the weekly time frame, we have established that we're bullish, right? Now what we have to do is go to the daily time frame and trade in that direction. Now sometimes the daily time frame might not be in confluence with the monthly time frame or the weekly time frame, and that I will show you how to solve that problem. It's very simple, it's easy, right? I'll show you in USD card. But for now, you can see the daily time frame is in confluence. It's compliant with the weekly time frame. It's compliant with the monthly time frame. It's bullish. Higher highs, higher low, higher highs. We had an area of interest right here, premeditated. That's what you need to understand. Now, these areas, we have plotted them out right even before the market started to trend all the way to the upside. You can see how it's using them steps, it's stepping on them, it's stepping on them. And the same way in the next future, we'll also make a video and we'll be right here stepping on top of this line, on top of this price right here, 107, 108.000. In the next future, we'll be stepping above this line and then we'll be buying all the way to the upside. But for now, let's focus on what we have at hand, right? And now we can see that we're stepping above this line, 106.000. You can see that these prices are not just random prices. These prices are around psychological. 108.000, 106.000, 105.000, 103.500. These are around psychological numbers. So it's very important for you to implement them in your trading. It gives you extra confidence. In trading, you need more than one confidence. You need facts to corroborate your story, right? So on the daily time frame, you can see we are bullish, and then we go to the 4 hour time frame and 1 hour time frame to look for an area of entry, to look for confirmations. We do not trade on the daily, we do not trade on the monthly or the weekly, right? We go to the lower time frames to excuse me, we go to the lower time frame to look for entry, right? So right here, I cannot find structure to draw a trend line, right? A counter trend line. So I go in the 1 hour time frame. It's very important. the counter trend line is very important because it is just another, it is another tool for an entry. Counter trend line, break of structure, these the and a chart pattern. These are the free confluences I need to have to be able to execute a trade. And even when I follow this confluence and I still hit my stop loss, it doesn't matter as long as I follow my trading plan. That is what matters. You know, so I have my counter trend line drawn like so. 1 minute. I have my counter trend line drawn like so, right? So and like so. So all right. So we got here, we bounced off, we came back down, we came up. Now we cannot execute here even when we've broken the counter trend line because we haven't broken what structure, right? So it then came back up, we tested it, and then formed a double bottom. As you can see, it formed a double bottom and then decided to push. Now the moment we broke the neckline of the double bottom right above here, that was when they executed. The same I'm saying to you. Now we have three things in common. We have a chart pattern, we have broken the structure, which is the neckline of the chart pattern. Is very important. A chart pattern is not a chart pattern until it has broken the neckline. The head and shoulder until it breaks the neckline, a double bottom until it breaks the neckline. That's when you know it's a chart pattern. It's a valid reversal pattern. So when we broke it, then after we broke it, and then we broke the counter line, and then we broke the neckline, also the structure, that was when I executed. And you can see it went up, came and retested the neckline, and then momentum started to kick in. But for now, we're still in this trade and we're holding all the way to the top until we get our first TP, and then we take majority. It's textbook. It's textbook. Just have to keep following the same plan every time, every time, every time. Continue to practice the same thing every time. It will get you will master it and it will get used to you. And any other thing that you think you should follow, it will not resonate with you. It will not sit with you because you've been practicing one thing over and over again, right? So for KJPY, that's it, and we're going to be holding all the way here. And I do not think you can execute another entry because it's already gone. You need to understand that you know the markets they leave. You see what I'm saying? The train has left the station. That is one thing. People need to understand that you cannot pursue the train. You see what I'm saying? Have you ever missed the train and tried to pursue it down the tunnel? You can't pursue it. You see what I'm saying? So let it go. It has gone. But it will always come back into the next train stop, and the next train stop right here is 108.00. So there you can execute. So for USD card, straight to the monthly time frame, you know how it goes. Monthly time frame top down analysis. You can see that we are still bearish, coming off of strategic areas of interest, or reversal areas of interest rather. And the monthly time frame hasn't ended, so we cannot judge this candle. We cannot read it. We cannot say anything about the candle yet. But on the week now, this is what I'm trying to say. On the weekly time frame, you can see we are bearish after we broke structure, lower lows, lower highs, lower lows, and it seems that we are putting a lower high right on the weekly time frame. If you take your Fibonacci to from this low to this low, and then you can see that we are in the golden zone, the 50% and the 60%. At this point, the market should be looking for it should be slowing down and looking for chart patterns to reverse. Now you can see that we broke structure on the daily time frame, right? We broke structure on the daily time frame right around here. But does that mean that we should start looking for buys? No. When you see a shift of structure on the daily time frame, for example, the most important thing is this: you have to be at an area of interest. You have to be at an area of interest, just like the Fibonacci 60%, 50% I just showed you. Yeah, you have to be at an area of interest to then look for a reversal pattern from the lower time frames to then sell to the downside. Because whenever the market, you need to write this down, right? Whenever the market is having a retracement on the weekly time frame, it can be a shift of structure on the daily time frame. Whenever the markets are having a retracement on the monthly time frame, it can be a shift of structure on the weekly time frame, and that is what happened to the S&P. The S&P fell, and everybody thought, oh, it's over. America is going into a recession. Oh, the dollar is done. But if you go to the monthly time frame, you will see all it did was going to go to fulfill a strategic monthly time frame Fibonacci. I'll show you just for context, right? Just for context, I'll show you that. So I do not really trade the S&P, but it is a very, very, I like to broaden my analysis. I like to use my analysis for every other thing to see, to make sure that it works for everything, to make sure that, when I want to, delve into crypto, it's going to work, So now let me show what I'm saying. Now on the monthly time frame, you can see, right, that all that happened right here was that, we came into a 60% and 50% retracement, and then you can see how the monthly time frame rejected and gave a money star candlestick formation right here to indicate that we could be pushing back up to the upside, right? And if you go on the weekly time frame, all we had was reversal patterns, double bottoms, double tops rather, break of structure, all of that. But you can see that we came into what the monthly area of interest. So we broke structure on the weekly time frame, but we came into the monthly area of interest, and now we're having a push to the upside. If you go on the daily time frame, we're already bullish and we're going all the way to the upside, and that's what I'm trying to explain to you, lot, right? It's not just from any point in the market, but it has to be from an area of interest in the market. So let's keep on with the analysis. Let's keep on moving forward. So on the weekly time frame, on USD JPY, I remember saying on USD JPY that we should look for sales on USD JPY. Now, like I said before, to catch a reversal, you have to be at an area of interest, and not just any area of interest. A reversal pattern is not a reversal pattern until it breaks the neckline. You see what I'm saying to you? So you can, if you notice, and the markets are they are precise. I keep saying this: the market is precise. It will not lie to you, right? You lie to yourself. So if you look right here, right, this is the neckline of this head and shoulders, right? It will be ideal to look for sales to the downside because the weekly time frame was still technically bearish, right? It will be ideal, but higher high, higher low, higher high. It did not even break below this low. So we were still was bullish, and then momentum started to come. But if we had broken this neckline and came down all the way here, then it would be ideal to look for sales. But it was not ideal to look for sales from above here because why? We were still bullish. We were still what bullish. While we are trading against the market, while we're trying to force the market into a direction it is not willing to go. You see what I'm saying? The market has to show us it's going to a direction, then we have to follow it into that direction, and that's how it works. Now on USJPY, we are bullish overall. We need a break on the retest of 146.500. And you can see that these lines are not just any lines. These lines have been drawn, you know, way beforehand, excuse me. So way beforehand. So we need a break on the retest of this level, and then we continue to buy to the next level, and then to this level right here. So let's deal with this level first. Now, if the market decide to come here and reject and start to fall all the way to that side until it breaks this next line before we start looking for sales for this level right here. So USD per and that's it. It's as easy as that. GBP seems to have taken off, right? GBP seems to have taken off, but you know there is something that you need to understand. There's a type of entry you need to understand. We are very bullish, higher, higher, higher. And I love seeing things like this. I love seeing structures like this. Very, very beautiful, very, very straightforward. You know, if you draw the counter trend line all the way from here, you can see that, 1 minute, you can see that it looks very, very beautiful, very, very structured. I'm trying to make it fit. I'm trying to make it fit, and for you to see how it's touched and it's touched again. You see what I'm saying to you? So it's following a specific line, it's following a specific pattern, and for us to ride the trend. This is what the trend looks like. You see what I'm saying to you? This is what the trend looks like, and it's very important that you ride this trend. I've taken a trade on GPSD. I think I've taken a trade on GPUSD, and I've taken quite substantial amount on GPUSD. But now it's time to look for I don't think so. Yeah, I think so. Yeah, but it's time to look for fresh entries. Now this is the same thing I'm talking about, right? On GBPUSD, daily time frame seems to be bearish. It's easy because structure wise is bearish. Higher high, higher low, higher high, higher low, higher high. We've broken structure. Structure wise, we are bearish, right? On the weekly time frame, we are bullish. But if you look on the weekly time frame, all we did was come into an area of interest. You see what I'm saying? All we did was have a pullback, rather. All we did was have a pullback, and the pullback came into what the 60 and 50%. You can see how beautiful that is. Now people might be thinking, sell GPS, but because they are too zoomed in into the market, it's something you have to zoom out. That's all you have to do. Zoom out, get out of the screen. Go to the monthly time frame, go to the weekly time frame, and see what the markets are actually saying. The weekly time frame will always overpower the daily time frame. The monthly time frame will always overpower the weekly time frame and the daily time frame, and that's how it goes, right? Now we are bearish, right? But we can notice that first thing I said was, excuse me, first thing I said was, if you go to the weekly time frame or the higher time frame, you will see that it may be a pullback. That's the first thing. The second thing I said was to be able to then get into a buy to to the or take a trade into the specific direction in the weekly time frame and the monthly time frame is saying you have to be coming off of an area of interest, and that we are. We are coming off of an area of interest precisely 1.34 thousand with a bullish engulfing, not just a bullish engulfing on the 4 hour time frame where we should actually be looking for entries from, whereas we seem to be having a reversal pattern forming up. We seem to be what having a reversal what pattern forming up, a head and shoulder, inverse head and shoulder, lower low, lower high, you know, the head, left shoulder, head, a right shoulder forming up, a potential right shoulder forming up. Now, this is what I would do right here. I would place my buy limit here. This is how I get into this type of trade. I will place a buy limit here, and then my take profit is around here, and then my stops come below, but it is also at an area of interest, or rather, it's also at a at a round psychological number. So if you look to the right, right, 25, it has to be below 50. It has to be 93, 80, 60, 53, right? But it has to be below 50. So 47 is perfect for me. And if you look, that is 3 to 1. And and I need to understand that my stop loss, my reach to reward, whatever I get is whatever I get. You see what I'm saying? Whatever the markets give me, is whatever the market give me. I'm not going to adjust my stop loss to make it fit into a good risk to reward. Never. I set my stop losses first. I then whatever the market give me when I adjust for a take profit, that's what I get. If I get a 2 to 1, is what I get. I'm not going to force it. If I get a 1 to 1, I will not execute because I need at least a 2 to 1 to be able to execute into a high risk trade. You see what I'm saying to you? So moving forward, for GBPSD, it has to come and retest this level. This is what is going to happen. Trust me. If it doesn't happen, then it doesn't happen. But when I say it's going to happen, it's going to happen. You see what I'm saying? It's going to have to come. I've seen this a million times. Trust me, I've taken trades a million times with this pattern. It is going to form a head and shoulders. The market has to show you reversal patterns before it takes off. So expect it to come into this left shoulder, a buy limit, or you wait for a bullish engulfing, and then you buy to the upside. It's as simple as that. There is nothing else for you to do. That is the plan right there. That is how to make a trading plan. You see what I'm saying? That is how to make a trading plan, and you follow it to the latter. For Euro USD, the market the market has left. If you look right here, the same thing is happening, right? We've broken the counter trend line. We're having some sort of a Richard pattern, but it gave us a double bottom and not a head and shoulders. But there's every potential that the market could come into the neckline to retest it and then push to the upside. But I'm not hoping on it. I'm not counting on it to happen. But it may, but I'm not counting on it to happen. That's what I'm saying to you. I'm counting on GPSC to come into that left shoulder. And if you notice, the neckline is also in confluence with this left shoulder right here that could potentially give us the bounce to the upside. So for Euro USD, if the markets come into this level right here, coming to the neckline to retest the neckline with a bullish engulfing, confirmation on the 1 hour, then I would expect executions to come in, and then stops come below the head, excuse me, stops come below the head of the double bottom. You see what I'm saying to you? Stops always come below, not in between. Stops always will come below. So if that happens, and then it happens. If it doesn't, then we keep pushing and we look for trades moving up to the upside. You see what I'm saying to you? Do not force a trade. I repeat, do not force a trade. Let it come to you. Do not force a trade. Let it come to you. And that will be all for this week. And I hope and I pray that you follow these rules. You see what I'm saying? Follow your rule. It's very important. A strategy. Everybody has a strategy. You see what I'm saying to you? You might have the best strategy until you take a loss. You see what I'm saying? Then you understand. You need to follow your training plan. I still struggle in following my training plan. You see what I'm saying? But the pain of not following my training plan is way worse than taking a loss. You see what I'm saying to you? Because I cannot learn from not following my training plan, but I can learn from taking a loss, right? So I urge and I pray that you Lord follow your training plan. It's very important. I'm not going to tell you look for the best strategy. For there is no best strategy, but there are good training plans. Follow your training plan, yeah. And hope and I pray that you Lord follow your training plan. See you lot later. Ciao, ciao.